Somebody recently asked me a very valid question when it comes to my dividend investing strategy. What they said was that since I personally would consider myself more of a dividend income focused investor that still wants long-term capital appreciation, but really is striving for and aiming for dividend income and cash flow today. They asked me why in the world would I invest so heavily into the Schwab US Dividend Equity ETF known as SCHD when something like JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF, yields about 3 times as much in dividends and also seems to offer capital appreciation as well. Now in this video, I'm going to explain to you exactly why I personally still would not necessarily only invest heavily into something like JEPQ. And we're going to stack up JEPQ and SCHD head to head and see which is the real better investment opportunity. Now, whether you currently hold JEPQ or SCHD, or if you just consider yourself a dividend growth investor, stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, just for some full transparency, as of right now, filming this video, I currently have around 507 shares of the JEPQ ETF, which currently earns me around $250 more or less on a monthly basis. Now, alongside that, I also own quite a bit of SCHD, currently around 573 shares of it, which currently earn me right around $140 or so on a monthly basis. And of course, SCHD does not pay dividends monthly, but I'm just going off of an average. Now, so far in 2024 and even a lot of last year, I have been heavily investing into SCHD using a majority of my cash balance on a weekly basis because I really want to build this position long term. And one of the main reasons that I specifically personally want to build out my long-term SCHD position for my long-term portfolio is simply because right now in the portfolio, I own a lot of different stocks and ETFs, but I don't necessarily have all that many pillar positions that are well diversified, offer long-term price appreciation, but on top of that also offer a nice steady dividend along with some substantial dividend growth. But to be fair, something like JEPQ also has grown pretty significantly over time, although we don't have all that much time to go off of because JEPQ is a relatively newer ETF, but really ever since 2022, JEPQ has been growing like crazy. On the last year time frame, this ETF is up over 27% as far as price return goes. Not to mention JEPQ historically has paid a massive dividend, like I said earlier, just about 3 times as much as SCHD. Now, a few things here. I don't necessarily think it's even really fair to compare SCHD head-to-head next to JEPQ because although these are both ETFs, they do offer very different strategies considering JEPQ is a cover call option income style ETF, which does use a cover call overlay to generate premium for investors and for the fund, of course. And although this strategy in a lot of ways is pretty bulletproof, it's not really fair to compare it to SCHD because, of course, SCHD just nakedly invests into a basket of holdings that go through different screenings to make it within the underlying index. And then over time, along with that, the holdings within SCHD are going to change. Different stocks are going to be added, different stocks are going to be taken away. But long term, this ETF strategy has been bulletproof. And you can see around 12 or 13 years ago, this ETF was trading at around $25 per share, now trading at almost $79, which is some massive appreciation, not even to mention the dividends paid along the way. Now, the first thing I'm going to say about comparing JEPQ to SCHD and why I specifically am not going only so heavily into JEPQ, even though theoretically I could sell off all my shares of SCHD, buy a ton of JEPQ, and raise my dividend income on a monthly basis by around 3 times. Now, there's multiple different reasons on why I personally would not be comfortable with investing very heavily in JEPQ rather than, for example, investing heavily in SCHD. Now, this is just for me specifically. Everyone's situation and strategy is going to be different, but just hear me out. For one, if you were to compare SCHD to JEPQ and how both these ETFs work, one of the main things to consider is taxes. Now, if you've watched my videos for a while, you know I absolutely hate talking about taxes on my YouTube channel because, for one, I am not an accountant and taxes are such an individual, personal thing. And because I've owned and operated businesses for the last decade, I promise you taxes are a very complex thing that are much, much better talked about with an accountant. But that being said, just between JEPQ and SCHD, they most likely are going to be taxed very differently, so that's something to consider when comparing both the funds. Another thing to consider is the dividend growth rate. Now, it's no secret that looking at SCHD's dividend history, you can see that this ETF has had some significant dividend growth long term, and this is one of the main reasons, if not the main reason, honestly, that I personally am investing so heavily into this ETF as of today. Because as a 31-year-old investor, I'm looking to get paid dividends today, of course, And earlier I did mention that dividend income cash flow is very important to me, maybe even more important to me than the next person, but along with that, getting paid more and more cash flow long term is also extremely important. With inflation running rampant, I want to make sure that my portfolio, my cash flow, my dividends are keeping up with the rest of the world. Another thing to think about when comparing something like JEPQ to something like SCHD is the dividend consistency. Now, I've dug deep into JEPQ and JEPI and other option income strategy ETFs just like these ones, and the fact that these ETFs do not pay even nearly a lot of times the same amount of dividends on a monthly basis can get sort of frustrating as an investor, especially for myself, because at some point in the future, I'm looking to use some of these dividends, if not all the dividends, built out in my portfolio to pay for bills, to pay for travel, or whatever the case might be. So if I'm investing into something that might be paying, let's say 36 cents one month and then 68 cents another month, and this is of course all due to volatility in the markets and how expensive option premiums are, etc., it's going to be very tough to know exactly what to plan for when my dividend income could be so sporadic. Now, I know what you're probably saying, SCHD also does not pay the same amount of dividends every single month, but with SCHD, we do have over a decade of track record showing every single dividend that was paid consistently. And as you can see, at least probably 90% of the time, the dividends have been steady from the previous year, if not bigger. And I can definitely sleep well knowing that. But speaking of track record, that's the last reason on why I personally would never invest only into JEPQ, even though it does yield 3 times as much as SCHD does currently, and this is because of track record. And to be more specific, JEPQ has only been trading since about mid-2022, and by no means do I necessarily think that a stock or an ETF that hasn't been around forever makes it a bad stock or ETF. But just for me personally, I'm more comfortable with a stock and ETF that has a long track record to look into and see what it's done. Now, so far, the track record that JEPQ has had has been pretty decent, although like we saw the first year or so, this ETF was trading down, sort of decaying like a lot of the other cover call option income style ETFs. But since then, due to the way the market and the underlying holdings, of course, have traded, along which has been at the right place at the right time, JEPQ has had an amazing previous year, and I'm definitely happy that I own quite a few shares of JEPQ across my portfolios. So those are just a few reasons on why I personally am not comfortable investing super heavily into JEPQ, and why I consistently want to buy more SCHD for my long-term portfolio, even though realistically speaking, I could of course sell off these 573 shares of SCHD, invest it into JEPQ, and earn 3 times the dividend income, which I'm not going to lie to you is very tempting to think about. But long term, I do want to build out this portfolio with multiple different pillars, a strong foundation that's going to grow this portfolio long term, slow and steady, and I think the SCHD ETF has exactly what it needs to do so. Now, this is not to say that I don't think JEPQ, of course, is an awesome investment vehicle, and I do want to continue to buy more and more shares of JEPQ, hopefully if it dips in share price, considering my average cost is $46 per share, and now it's trading almost at $54 per share, which is great. But long term, I want to build out a diversified portfolio with different pillars that offer cash and long-term appreciation. But now in the talks of SCHD or JEPQ, even though JEPQ offers a much larger yield, which one out of those 2 ETFs are you personally buying as of right now? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.